Good evening, all. Ira Epstein with your SPDR ETF wrap-up for this Tuesday, the 6th of September, 2022, and we're about 6:05 p.m. Interesting day. You know, we come back. It's the first day where what I call the A-League traders are jumping back in the market. Markets tried to rally this morning. I kept wondering why, and they kept trying and was doing it. And then by, I'm going to say, mid to late morning, you could just see there was give up. We broke hard, came back in the indices, but if you look behind me, it's mostly red. We can see Twitter still holding in there. Tesla's doing okay at this point. Rivian was up a good amount today. I was watching that. You've got to keep your eye on the lawsuit. I know that the person that's the whistleblower, the attack went on him today as to why, I guess, over at Twitter, he never turned in forms complaining about what he thought was all going wrong. I'm reading what I did in the paper. I know nothing about other than that. I'm very concerned with what I'm reading in Europe. You're starting to see in the Netherlands, the bakeries are having to shut down. They're the private bakeries. The big ones that do about 85% of the product, they're still on natural gas, and their contracts for it have run out. So now the costs are going to start hitting them. Because of their size, they're able to get large contracts that have just run out. So now a problem happens, and they're not of the technology out there to switch over to electricity, so they have a real problem on their hands. I mention that because you got the same issues going on with aluminum production. And in aluminum production, I was reading how one of the companies that produces in France has this huge issue. They're going to cut back production 23%. They don't have to lay off people, they said, but they have to cut it because they can't afford the energy costs to go into that. Well, this is the tip of the iceberg. A lot worse is coming. I mean, when I tell you the tip, this is like hearing the first cases of COVID when we did 2 years ago. It's the beginning. As cooler weather comes, things go on, as the tourist season ends, and it was phenomenal for Europe, by the way, phenomenal for Europe. Problems are going to set in. So just got to mention that. UK has also a new prime minister. Let's wish her the best. So as we look, I'm moving over to Shopify. I'm just picking names that I want to go with. Look at where this was at the beginning of the year, $140. We're at September 6th. You're at $29. Wow. When I take the chart and put on the current formation, the swing line is this brown line that attaches to the bar chart on each part. I put the peak because when you're in a trend, you'll have lower highs, lower lows in a downtrend, higher highs, higher lows in an uptrend, and no trend in some manner has a higher high and a lower low, nothing there. Well, this is a downtrend with lower highs, lower lows. To negate it, you've got to take out 31.99. The market just had a bearish crossover, and I can show that to you right through here, where the 18-day average of closes got under. You'll see it right now, the blue. And when you do that, you normally start pushing the market down to lower levels. That is very typical, and that is what's going on. The objective right now is wherever that Bollinger Band comes in. Currently, it's at 27.35 on the close, and momentum is embedded. Now, what does this all mean? Embedded means you've locked in the downside momentum. And until it changes, and you'll get an inkling, in fact, any close over 21 tells you that that's what's happened. If you get that, the way I teach charting, I tell traders in the last 2 minutes of the day, you come out. Worry about it if it re-embeds. If it doesn't, you get a lead because sometimes the market will lose that reading. I'm looking to see if we had one back here. Back here, yes, you did. And when you lose it, before you get back to the 18-day average, you often have time. It leads, typically, momentum leads price. Does it always? No, not all the time. Most of the time, yeah. From my observations, I have not run a computer study on it because I don't care. It's how I'm going to trade regardless, all right? It works so often, you want to go with it. I'm not looking for the few times it didn't work. Who cares? Nothing's perfect on a chart. It's charting at the end of the day. In an A case, that's locked in. Trend down. I think the pros are selling each little rally until that red line closes back over 21, looking for wherever the Bollinger Band comes in. Now, it's not always the Bollinger Band objective. There's something called a window envelope that I do not show here. I show it in my paid-for subscriber services that comes out. I record at 9 in the morning Central Time. It's out 9:40 to 10 o'clock in the morning. And that's where they're at. There's other profit objectives. For the simplicity of all these lines on a chart, I show you these. AMC did terrible. This should have gone up more. You had your $3 movies. People went. I'm assuming they enjoyed it. I've seen everything coming out now going into the end of the year. I looked up the schedule. I don't think you have enough blockbusters to rescue this. Bankruptcy? I don't know. Reorganization? I don't know. I'm not a fan. It's that simple. And the chart's telling you not to be a fan. It's that way that I read it. On Apple, tomorrow's the big day. The big day. Tomorrow we find out about the new phones, the watch, and a new subscription service that we're sketchy on the details. Apparently, Apple would like to get us to buy a new phone every 3 years or so. I'm one of those characters. To subscribe to a service so we can get new phones on a regular update basis. We pay more. Instead of buying the phone, we're a monthly subscriber. I don't know how it works. I don't know the cost advantage that I get from that in any manner. I don't know if there is an advantage or I just want to get the new phone, but I find I don't need a new phone every year. They don't make enough radical changes to warrant it, in my opinion. So we'll see if it takes. In any case, big support, 153.14 to 152.78. If you take out the 160.36 level, it'd be a good sign that you don't want to be on the short side of this. Disney, as I said, I don't see what holds it up now that the parks are going to lose attendance, everything else. I mean, Labor Day's come and gone. Other than, you can't take your kids out of school to go there now. So that revenue goes just whatever it's going to do. It drops, and it drops hard seasonally. But they still have their streaming shows. They have their movies. The problem is I'm not seeing a lot of blockbuster movies that look like they're going to come out. We have a few. People love the DCs and all those. So we'll see what happens, DC Comics. But I'm looking for the market here at 107.66 to 107.54 objective. You have an embedded reading now in the financial services. This is the kiss of death. I think you're going back down. Rallies now until the red line here. Close back over 21. It's got a reading of 1084. I think they get sold and sold hard. There's a way to do it. My enhanced Bollinger Band course teaches you that way to do it. It's not as simple you sell it. It's at a certain number and a certain event has to happen, and I'm not going to tell it to you here. XLI, you're developing your embedded reading. Day one of embedding was today. Here's Friday. Both numbers were under 20. And here's the day before, both under 20. So you got your embedded reading. So I'm going to repeat. I think the pros are going to be aggressive in selling this market tomorrow based on a certain event. Those of you that have taken the course know I'm not just teasing. It's so simple, and you look at that. XSD, you're not quite with the embedded reading. You're knocking on the door. Notice how this market got under the Bollinger Band and moved to the right-hand side. Why? On this algorithm, if you do your historical looking at it, it's built to do this. Only 5% of the time will the market settle above or below, outside of the bands. Keep that in the back of your mind. So the logic is, first time you hit the band, take some money off the table. You think it didn't pay spades? I do. That's assuming you're short or long. That's the trick you have to get right. Not that hard, but it is hard. It sounds so simple and it's so hard to do, right? To be right the market. You're either right or wrong. You got a 50-50 chance. How come you're wrong so often? That's why I went to charts. I gave up the idea of investing. I like my chart action. Charts tell me what to do. Lower highs, lower lows. So 57, 52 should be support. If the market were to just pop higher, I think the pros will sell it. You're freshly embedded. You need a rally to get short. Haven't had one yet. I think we'll get one. In the energy sector, neutral time. To a degree, it's bearish because you got the lower highs and the lower low. But you're so close to the 100-day average with the 18, I'll let somebody else play that game. Oh, and by the way, if the market were to get back over 81.02, it would actually flip-flop bullish and give you a projection of the upper band. As these bands narrow in, be careful. You start entering churning time where you don't go anywhere in a big way. Gold, I remain fully committed to the bear side of the market. Lower highs, lower lows. On rallies, I continue to see selling until the red line closes over 21. GDX, it's the same story. You have the bearish embedded reading with a market that was running the Bollinger Band, moved to the right-hand side, working off some of the pressure of just leaning on that. And I think the pros are hitting the market now. Copper, not embedded. Different game, oversold. I don't see the bull story here. China had more cities go into a lockdown over the weekend over COVID-19. So they're sticking with their policy of zero tolerance. So you want to go and you need product? Okay. They'll tell you, well, we have big campuses where we can make chips and we can put together cars. I know you do. But what about the component makers that send to you? They're not all big companies with campuses. Eventually, just like in America, you need parts. That part has to keep coming. Things slow down. You know I'm right when I say that. It's just how it works. None of these companies buy all their components or make their own. They buy a massive amount of them, and not every company they buy from is such a large company. They have a campus where the people are on it. They don't go home. They're able to stay there. It sounds like fairyland to me. It's not real. TLT, still the bear pressure. Getting overdone. You're under the Bollinger Band. I teach to never, ever go short under a Bollinger Band. Why? Because the market only stays under it 5% of the time. I'll wait. Let the market relieve some of that pressure. UUP, I have been bullish as can be on the dollar. You're now into the zone where getting up to a top area here. I didn't say a trading top, but a toppy area because you're back to the Bollinger Band. 29.70 is that number. You're 15 cents away from it now. You were 7 cents off it for the day. And I was telling my clients right here, that's how friendly I was, all because you embedded. In FXE, not embedded, you're falling, okay? So if you get down to 90.64, I expect the pros will cover all their shorts. They won't hang around in the market. You put it together, you come up with game plans, and that's what this enhanced Bollinger Band course does. It teaches you Bollinger Bands, it teaches you momentum, how to apply the two, the entry points, the exit points, where you'd be wrong, how to figure that out. It's pretty simple. Somebody wrote me today about a cheat sheet. I didn't create one because it's so simple. I was thinking about it later. Maybe I could create one for the next version of the course, but honestly, it's that simple. I'm Ira Epstein. Take a look at this, learn a little bit. You have a good day. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.